Is there arguably too much AI hype in both private and public markets? Because the theme right now is really you have to be selective and discerning in what you pick.
You have to. There's really nothing cheap out there, and AI is obviously hot and is a very important trend in the venture capital industry. But I think the point in private markets investing is that is just one of the different strategies you need to do. And you have a diversified range that goes from private credit all the way to controlled buyout. So AI is an important sector, particularly in venture capital and growth, but it's just a component of the range of alternatives that you can have within private markets.
Ultimately, what is the exit for PE?
I think the exit, you mentioned that in just a minute ago, the IPO market is an important exit. But again, data over anecdotes, and we have data over 50 odd years of it, and 150,000 companies, and nearly $18 trillion. If you look at all that data, IPO for the overall private markets has really never been more than about a quarter to a third of the exit path. And of course, that is at the moment slightly, as you mentioned, subdued, although the pipeline is getting more active and pricing is not what you might want it to be. But the other two main exits for private equity are other strategics, so other corporates, other companies, and essentially other forms of private markets ownership, either funds, other GP continuation vehicles, secondary purchases. Really, except for China as a standalone market, no other market really has sustainably had IPO as the only exit window. So I think that you have to consider that range of opportunities.
So Juan, Martin here, good to see you and thank you for your time. So as you know, private markets have had a strong run the last almost quarter of a century, 23 years or so, right? The past year though, that's been pretty tough, right? Fundraising dropped noticeably, down by about a fifth globally, if I'm not mistaken. And I think now guys like yourself are focusing more to try and boost performance on businesses that can show strong revenue growth as well as able to grow margins. Where are you finding that?
I think you're right, Martin, in right on your two comments. I think fundraising has been the weakest link. But you have to also accept that when you looked at 2023 and we looked at the year, it's really one of the top 10 fundraising years in the history of the industry, going back 50 years. So again, if you listen to the fund managers sometimes cry that it takes longer and they raise less, you might feel like it's a disastrous year. But fundraising was not that bad. And again, one of the top 10. So capital is there. And to your point of holding these assets, again, another metric in the industry, perception of private markets is that it's a short hold. And the reality is that the average holding period has moved up to 5 years. So if you're going to buy something that doesn't look very cheap and you're going to hold it for about 5 years, again, Martin, your comment is right on. It's all been about growth, right? Fundamental growth. And that's really where you can see a lot of the buyout strategy focusing on in sectors that have fundamental tailwinds, like the healthcare, the consumer in certain areas, logistics, infrastructure, etc.
Juan, how important is profitability or a clear path towards profitability for investors when they are looking at targets either in the private or the public markets?
I think it's very important, again, remember that you are going to own this portfolio for a while and you are going to have to be able to go through these exit windows and cycles. So with the exception of early stage in venture capital investing that can invest pre-profit, this is an industry about buying companies, owning them, aligning management, incentivizing that, and making them better and bigger companies. So with that in mind, it's been essential going into an environment where the reason why private markets outperform was precisely, as you point out, because they were growing top line and bottom line ahead of the public markets, and that continues to be very much the focus. So value creation, buy and build, a lot of M&A happening in the buyout industry at the moment. Multiple paths. Essentially today, when you look at investment committee, everyone wants to have multiple avenues to achieve that growth because the future still looks uncertain.